Hey, what is up, boys? What is up? What is up, ladies and gentlemen? Welcome back. Welcome back to my channel. So, in today's video, just gonna have a first lecture on market maker models. This is what I use. It's what most ICT traders use. It's what ICT himself used. It was his favorite model. So, why not try to learn from the master himself? But I'm gonna try and simplify it for you guys here because it's been it's like most requested video on my channel. I get comments about it, people text me on Discord like they would like to see this. But anyway, so let's begin. Market maker models. So starting here, what is a market maker model? It could be a buy or sell. Market maker model is simply the way markets move from premium array to discount array, vice versa. If you know where the market is likely to draw towards, we can capitalize on that move. The draw can be in the form of a high time frame liquidity, fair value gap, and order block, etc. So what do we need for us to validate market maker models? We need an SMT, inverse fair value gap, change in the state, equal highs or lows, micro time. This micro time is when, that's important, when the market is going to expand. You could know where it's going to expand, but you need to know when it's likely to expand. Because we're trying to time expansions here. And we need this SMT. It's very important, SMT. And then here you can either have inverse fair value gap or change in state. It's an and or type of situation here. You can, even if you have both, that's great, but if you have an IVFG with an CSD, that's fine. You can have a CSD with an IVFG, it's still fine, But then this is more, I feel like this is much stronger if you get an IVFG compared to the CSD. I feel like it's much stronger. Anyway, enough with that, let's move on. So what is an SMT? SMT is a cracking correlation between two highly correlated assets. This could be NQ, ES, YM, GU, EU, GJ, EJ. These assets here are positively correlated. I don't know much. I don't usually trade negatively correlated, but then they are like NQ to the dollar index negatively correlated. But then so I stick to positive correlated because I trade NQ and ES most of the time. So what is an SMT? As you guys can see, I'm going down, trading into a high time frame PD array. It's going to be a fair value gap, order block, rejection block, sell side liquidity, could be whatever, man, whatever, because now we're in a buy program, whatever. So putting this low, let's say this is NQ, EQ, no, NQ, ES. So NQ puts in a low, ES puts in a low. We reject, so you guys can see we're rejecting. The NQ makes a lower low, and ES makes a lower high. Can you see this low is higher than that one? But then this low, but this low is lower than that one. So that what signals a market maker. No, it signals an SMT, which means a market maker buy model in this, here it's likely to occur. So you guys can see after this SMT, we start to expand. We expand, break up on this high, we come and retest this high. In this high, this could be a change in the state. It could be a change in state, could be your breaker, could be your 2022 mentorship model. It could be anything. But what's more important here is the SMT here, because without this SMT, it's low probability. So anyway, let's move on to IVFG. It's breaking above or below an FVG, which changes order flow or signals a reversal. As you guys can see here, our change in state is somewhere here. See, change state is here, and our fair value gap is here. Since we were in a sell program here, I just took a picture of a screenshot, but then you can see a high picture. But then change in state is here. There's a series of down close candles. Then we have a fair value cap here. as you guys can see here, we inverse this before we get a change in the state. So here you can actually get a better risk to reward, because as soon as we break this, because coming down here we're respecting bearish fair value gaps. As you guys can see, bearish fair value gap, we're respecting that. But as soon as we come here, we're testing a high time frame level. What are we doing? So in SMT, what are we doing? Breaking above, which shows that price is more likely to head to the upside now. Buyers are going in, market makers trying to reprice price towards the upside. As you can see, we break this. This could be your long entry, stops here, instead of long entry, stops here. As you can see, this thing is much smaller than that one. Either or, you know, anything you can enter, you know. But then we break above this, we respect this, showing us what likely to go to the upside. We have this respect candle, then price does what? Just tends to upside. Yeah. And market maker models, this our final target should be like equal lows or equal highs for low resistance, liquidity runs, and macro time. I told you guys this is when it happens. It's not about it happening, but it happens when time and price. You gotta align those. So here what do we have? 1 hour time frame. Price left this fair value gap here around Asia towards London. So London, we come back here, we test this. After testing this, we see a sloping movement back towards the upside. So now we have what? We have two confluences here. We have two PD arrays in which we can frame our model from, you know, internal, external, buy, sell side to buy side. Here we look at to buy side, you know, trading up, come back down here, leaving a low, which is that, leaving a high, which is that high. And then as soon as we get into this 1 hour PD array, now it was a 9 AM candle too. Now we're going down to the lower time frames to look for model. Hopefully we can get catches more towards the buy side. As you guys can see here, we have time cycles here too, implementing those time cycles. You know, this one is a accumulation, manipulation, distribution. We get I'll probably make a video later on that, but for now just to keep this thing short. As you guys can see, we're trading down. What are we doing? Respecting bearish fair value gaps, respecting what, doing what? Equalize, high, low resistance liquidity. We can draw a trend line. We can draw a trend line until we tap into that thing. That's what I was talking about when we have to wait for macro times. We have to wait for the right time for market expansions. Because check here, we disrespected that, got a change in the state, but price didn't tank up. Why? Because it's not the right time to do so. The idea is right, but then it's not the right time. So one more drop down and takes out sell side, internal sell side. We get an inverse fair value gap and change in the state. Inverse fair value gap and change in the state. This could be an entry, but then if you know at what time could it happen, because it could have been chopped up here, unnecessary loss, and then you come and could get a win, but then still at loss. Anyway, as you guys can see, we take out this inverse fair value gap, change in the state, we tap that, we go up, and then now what am I waiting for? Macro times. What am I waiting for? Macro time. This tells me when the market is likely to expand. And we get that. This is something like, if you see this thing, I'm telling you now, you cannot unsee it, boys. It's basically a cheat code, to be honest. Extended macro times. So what are we doing? As soon as we break above this fair value gap 2, I'm expecting down close candles to be respected. I don't want to see us closing below, wicking whatsoever. No. I'm expecting them to hold. As you guys can see, come in here, macro time starts, we create this order block. Price goes up, but I didn't take an entry because I saw like we're still respecting that. But then as soon as I saw this candle here, as soon as I saw like bullish power, bullish momentum towards upside, I entered here, entered my longs, doing what? Range high, range low, range high, range low, 50% down there. That's my first partial. You guys can see entry here, stop loss below this order block, because I'm expecting these order blocks, stand close candles to hold price towards upside until we reach our full target, final target. So dropping down, I take my buy, first partial out here, second partial on this highs, and my last lot up on this buy side level, which this candle took both partial and final. As you guys can see, look at this. Can you see like we're dropping around, but as soon as the macro starts, straight to our target. It doesn't play around, it doesn't read. This is what you want to see in your trading. So you can see consolidation, macro, boom, trade up. Yes, that's all for this. Let's look at an example. Here we have a 1 hour fair value gap here, holding price. We have this inducement just next to it, dropping down below with this range high to range low. So as soon as we got this SMT inside this 1 hour fair value gap, I was expecting a what? Sell model. Because this is a buy model, I'm expecting what? A sell model, because now we have an SMT inducement, range low to high. We are so we are high up in premium, looking for discounted prices. What do we have in discounted prices? This new week opening gap, new day opening gap, so that is fair value gap, so that is lows, equal lows, because price all of Asia and London price was engineering liquidity for us to come back and run it around London, not around New York, excuse me. So as you guys can see, right, this is a target. So dropping down here, pay in mind all these trades here, I took them, just that I didn't post this on my YouTube, but all these trades I took them. I actually took a buy from on the stage. You can actually check it out on my YouTube. I took a buy from this, because I was expecting us to, have some sort of retracement back to the upside. We can just time price doesn't move like that. It moves premium, discount, premium. That's how it moves. Anyway, enough with the yapping. We're here. I did, as you can see, 9:45, 10 a.m. Can you see these black candles coming through? Can you see these black candles? Yeah, we're just tanking. We have this order block here. We come back up. It's tested. We drop down. This should have been your short entry. Targeting what? This framework. Anyway, here. So what are we doing? Opening prices. Come back down here. 9:30. Actually took everything out here because 9:30 was actually holding. It's kind of skeptical if maybe we might reverse, break even, because I was break even. Anyway, this was my sell side. As you guys can see, what are we doing? Engineering liquidity, lows, bunch of stacked up lows, respecting what? Bullish prices, respecting it until what? 9:45. Until what? 9:45. Until we get SMT, 1 hour SMT, until what? We disrespect this fair value gap here. 9:45, 10:15, magic happens, boys. As you can see, in this fair value gap, changing the state, order block. What do you expect? We expect these candles, up close candles now, since we have sell program, up close candles to be respected. Respecting that, as you guys can see, respecting. Here was a bit of a consolidation. We didn't look for an entry here because we're just wicking from 8:30. But then here, respecting that, as soon as we displaced, because fair value gaps. Now as you can see, bearish fair value gaps are now actually holding now. Break up. You don't want to see price trading to that. Actually holding breaker. So I got my entry breaker here. Because this OP on this buy program, this OP had a fair value gap. So as soon as we invest that, I just knew high probability breaker. as you can see, we don't fill up this favorite gap all the way. We leave the upper half and untapped. As you guys can see, price just tanks, but to the downside. Completing what? Completing this move that we anticipated from the 9 AM candle up until. So don't actually take my word for it. Go into the market, go into the charts, actually test this thing out yourself. If it works, I know it works because I've been using this, yeah, actually test it out. So yeah, that was all for today's market maker, buy and sell models. Make sure you subscribe, leave a like, and comment on what you want to see in the future. Thank you.